Welcome to Dailystocks Europe. Today we dive deep into Orkla ASA, a Scandinavian powerhouse in branded consumer goods. Let's uncover its story, brands, and performance. Orkla's journey began in 1654 as a copper mining operation in central Norway. Over centuries, it evolved into one of the Nordic's leading industrial companies. By the 1990s, Orkla had transitioned into fast-moving consumer goods. Key moves included merging with Nordic in 1991 and acquiring major food and snack brands across Scandinavia. Today, Orkla is a branded consumer goods conglomerate with operations in over 20 countries, structured around 11 core business areas. Orkla operates as an industrial investment company. Its portfolio is split into anchor, assets, grow and build, ventures, and transform or exit segments. The anchor businesses include Orkla Foods Europe, confectionery and snacks, and a 43% stake in the global coatings company Jotun. Orkla's high-growth targets include its operations in India, health and nutrition, and pizza restaurants across Europe. Recent divestments include Lilleborg, Pierre Robert, and Orkla's entire hydropower portfolio. These exits reflect its focus on core FMCG segments. Orkla owns more than 300 brands, many of which are household names in the Nordics, from Grandiosa pizza to Kim's chips and Jordan toothbrushes. In Scandinavia and the Baltics, Orkla brands hold a top 2 market position in 80% of categories. Orkla India leads in the branded spice segment. Revenue has grown steadily to over $6.3 billion in 2024. Net income rebounded from 2022 lows to $547 million last year. Key metrics: P/E ratio 17.3, P/B 2.22, ROE 7.4%, dividend yield 9.3%, free cash flow $693 million. Using the Graham P and Schiller P valuation models, Orkla appears fairly priced, suggesting modest growth with stable income potential. Free cash flow has grown 66% year-over-year, outpacing long-term debt. Orkla maintains a disciplined debt/EBITDA target of under 2. Orkla is smaller than global FMCG leaders but similar in financial structure, offering stable returns, modest margins, and regional strength. Orkla India is now a growth engine. In 2025, it filed for IPO in India, tapping into one of the world's fastest-growing consumer markets. Orkla targets net zero emissions by 2045 and deforestation-free supply chains by 2025. It's also phasing out palm oil and reducing plastic use. With a high dividend yield near 9.3%, Orkla prioritizes shareholder value, appealing to long-term income-focused investors. Challenges include high exposure to the Nordics, cost inflation, and limited brand presence outside Europe, balanced by strong fundamentals. Orkla is a Scandinavian